What you are about to learn is a game-changing approach to reading volume in the market. We are going to explore two powerful TradingView indicators that work together to give you a complete picture of market activity. Stay with me until the end, because both indicators together are what make this strategy truly effective. Let's start with the first one. Open TradingView, click on Indicators, and search for Liquidity Thermal Map. Select the one written by Big Beluga. Once added, you will notice it overlays directly on your price chart with a colorful background. At first glance, it might look complex, but it is actually very straightforward once you understand what it is showing you. This indicator displays where the highest concentration of volume occurred across different price ranges. Think of it as a visual version of the volume profile indicator, but instead of showing horizontal bars on the side of your chart, it paints a continuous thermal heat map directly over your candlestick chart. This makes it far easier to visually identify price zones where market participants showed the most interest. Here is how it works mechanically. The indicator takes the entire price range within a defined look-back period and divides it into equal horizontal sections. For each section, it calculates the total accumulated volume every time price closed within that section. Once all sections are calculated, the results are displayed using a color gradient across the background of your chart. This creates what is called a liquidity heat map. Now let's talk about how to read it. Price ranges where very little volume was accumulated will appear transparent or muted in color. Price ranges where volume was significantly higher will appear with a stronger, warmer, and more intense color. By simply glancing at the chart, you can immediately identify which price zones attracted the most trading activity. These high-volume zones are the areas most likely to act as significant support or resistance levels in the future. The reason these zones carry weight is rooted in basic market mechanics. When a large amount of volume is traded at a specific price level, it creates an imbalance between supply and demand. That imbalance does not disappear once price moves away. It remains embedded in the market's memory. When price returns to that level, participants who previously traded there will react, often causing a bounce, a stall, or a reversal. For example, you may notice a price range with a deep, warm color that previously acted as a strong support floor. When that level eventually breaks, the role of that level can shift. It may transform into a resistance ceiling on any future retest. However, keep in mind that not every break will behave the same way. The strength of the reaction depends on where the actual selling or buying pressure originated. One standout feature of this indicator compared to traditional volume profile tools is the continuous nature of the heat map. There are no horizontal bars cluttering the right side of your chart. Instead, the entire historical volume distribution is embedded seamlessly into your price chart, allowing for a much cleaner and more intuitive analysis of significant price zones. The indicator also highlights what is known as the point of control. This is the single price range where the absolute highest amount of volume was accumulated throughout the entire look-back period. This level is labeled directly on the chart and is considered one of the most critical levels to monitor. The sheer volume at this level means a major imbalance was created here, and it has a strong probability of acting as a significant resistance or support zone if price approaches it again. Additionally, this indicator includes a vertical scale on the side of the chart. This scale tells you how total volume is distributed between bullish and bearish candles. Bullish volume represents candles that closed higher than their opening price. Bearish volume represents candles that closed lower than their opening price. The scale shows you the percentage breakdown between the two. When you hover over it, the indicator will explain each section in plain language. For instance, if the scale shows that 95% of total volume came from bearish candles and only 5% from bullish candles, this tells you clearly that selling pressure has dominated the market. This kind of data helps you quickly determine the overall directional bias. Think of this scale as a balance between buyers and sellers. A wide imbalance signals a strong dominance from one side, which is important context when planning your trades. Now, Analyzing volume across price ranges gives you a vertical perspective. But to complete your volume analysis, you also need a horizontal perspective, meaning you need to analyze volume across different time periods. This is where the second indicator comes in. Go back to the indicator search and look for volume delta, specifically the one written by half harmonic. Once added, it will appear below your price chart. By default, it includes 2 EMAs and signals on the chart, which we do not need. Go into the settings and remove the EMA lines to keep things clean. This indicator breaks down volume for each individual candle, showing buying volume and selling volume separately. There is a table in the corner that updates in real time, showing the current candle's buying volume, selling volume, their respective percentages, and the net volume figure. For each time period, you will see a vertical bar similar to a standard volume bar. But inside each bar, there are 2 distinct colors. Blue represents buying volume, and red represents selling volume. A bar dominated by blue tells you buyers were more active during that period. A bar dominated by red tells you sellers were in control. These colors are also reflected on the candles themselves, giving you an immediate visual read on who dominated each session. By combining these 2 indicators, you now have a complete volume analysis framework. The Liquidity Thermal Map gives you the vertical dimension, showing you the most significant price zones based on historical volume concentration. The Volume Delta indicator gives you the horizontal dimension, showing you the buying and selling pressure within each time period. Together, they allow you to confirm trade setups, identify high probability support and resistance levels, and make more informed decisions on entries, stop losses, and profit targets.